The launch of the Federal Reserve's instant payment system, FedNow, has set the stage for a fierce battle among fintech and crypto startups, seeking access to the coveted master accounts required for direct entry into Fed-operated payment systems. This high-stakes quest for master account approval has resulted in delays, rejections, regulatory challenges, and lawsuits, with significant implications for innovation in the financial sector. As we delve into this complex landscape, we'll explore the key players, the evolving regulatory framework, and the potential impact on the industry's future. The Federal Reserve's recent launch of the FedNow instant payment system has significantly elevated the value of gaining access to master accounts, a privilege currently withheld from certain institutions such as Kraken Bank and Custodia Bank. FedNow, introduced in July as the Fed's first new payment system in half a century, holds the potential to revolutionize payment processing by enabling near-instant transactions for both businesses and consumers. However, the process to acquire a master account, necessary for direct access to FedNow and other crucial Fed services like FedWire, has proven challenging, leading to delays, rejections, and legal battles for fintech, crypto, and emerging financial startups. To gain access to the Fed services, institutions must secure a master account approval from one of the 12 regional Federal Reserve banks. This requirement has sparked a contentious battle, with fintech and crypto companies aiming to expand their innovative offerings but facing hurdles in obtaining the coveted master accounts. The new FedNow system further intensifies the stakes in this ongoing struggle. The master account acts as a conduit for banks to access Fed-operated payment systems. Not having this access could hinder the innovation of these startups or force them to rely on traditional banks, thereby sharing transaction fees. The Federal Reserve is keen on ensuring that new entrants and innovations don't compromise financial stability. Regulators emphasize compliance with minimum standards to prevent attempts to bypass regulations. The Federal Reserve has posted a public database that reveals recently approved, rejected, and pending master account applications. Institutions such as Custodia Bank and Pay Services, which were rejected, have already filed lawsuits questioning the legality of their denials. Custodia, with a Wyoming Special Purpose Depository Institution bank charter, aims to bridge the gap between digital assets and the traditional financial system. Pay Services, focused on facilitating international money transfers, faced its own rejection despite having a preliminary Idaho State bank charter. Kraken Financial, affiliated with Kraken, the world's third-largest cryptocurrency exchange, is also among the pending applicants. Wyoming-based Kraken Financial, with a Wyoming SPDI charter, has been waiting for master account approval since October 2020. Other startups like Accelerin and Banking Circle US, aiming to streamline international payments, also find themselves in the queue. The Federal Reserve introduced new guidelines to review master account applicants, creating 3 tiers based on factors such as FDIC insurance coverage and federal oversight. Some applicants argue that the guidelines are too subjective, granting reserve banks excessive discretion without clear requirements for approval. Kraken Bank CEO Trevor Reuter seeks more clarity and transparency in the decision-making process. The potential approval of one Tier 3 applicant could trigger a surge of interest from larger fintech players like PayPal or Stripe, further shaping the industry's future. Although the launch of FedNow has sparked excitement among fintechs, the ability to connect to the system remains crucial, necessitating a clear pathway for integration. While some of the pending applicants lack FDIC insurance and hold state charters or specialty charters, even traditional financial institutions lack FDIC coverage among the existing master account holders. The Federal Reserve and the Office of the Comptroller of the Currency are developing their approach to fintechs and digital asset businesses, as seen with the creation of the Novel Activities Supervision Program. Given the challenges in obtaining master account access, Fintechs may consider the alternative of obtaining a national bank charter, which comes with its own regulatory responsibilities. Despite the hurdles, companies like Adyen, holding a European banking license and a federally issued U.S. branch license, have secured a spot on the list of early FedNow adopters. In this complex landscape, both new fintech entrants and traditional financial players must navigate regulatory requirements while striving to innovate and create a safe, efficient, and inclusive financial system. In the dynamic world of finance, the battle for master account access rages on. The launch of FedNow has spurred innovation, but hurdles remain. Striking the right balance between innovation and regulation is crucial. Clarity and transparency in the approval process are essential, and collaboration among stakeholders will shape the future of payments and banking. Together, we can create a resilient, inclusive financial landscape that benefits everyone.